Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. In addition to preparing financially for retirement, it's important to prepare for the non-financial, more emotional aspects as well. Stuart Ritter, retirement insights leader at Rowe Price, joins me for Financial Literacy Month to discuss how to visualize retirement. Stuart, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. It's great to be here.
You got it. While there's a lot of focus on the retirement aspect, saving for retirement happens in the larger context of someone's overall financial life. What are the biggest expenses for every age group?
It might surprise some people to learn that the biggest expense is the same for all age groups, from people in their 20s to people 65 plus. According to the Bureau of Labor Statistics, they go out and survey people every couple of years. It turns out that the housing category is the #1 expense for folks. So not just the rent or mortgage you might be paying, but all the utilities and the furnishings and things like that. So when people are thinking about where their money goes, recognize that about 1/3 of your spending goes to housing. And then the next biggest category is transportation. About 15% of people's spending, while their expenses, goes to transportation. So almost half of what people spend goes to those two categories. So as you're thinking about where you might be working on your budget, where you might want to free money up for your priorities, recognize that housing and transportation are the places to start. And folks can think about whether that cup of coffee they're buying fits in there, but housing and transportation are the top two.
What about credit card debt and budgeting?
I get asked about credit card debt a lot, and if I'm doing a live presentation, I'll ask people, what percent of American families do you think carry a balance on their credit card and have done so at any point, any month in the last year? And I'll give people choices like 60% of families, 70%, 80%, 90%, and usually everyone goes for those higher numbers. So everyone's pretty surprised, as I was, when I learned that actually only 45% of American families actually carry a balance on their credit cards and have done so at any point in the last month. So another way to state that is most people pay off their credit card bill in full every month, more than half of American families. And that's not a new phenomenon. That's been going on since 1989. The Federal Reserve goes out and does a survey to check on that. And literally since 1989, more than half of families have paid off their credit card bill in full every month. So if you're in that group, know that you're in the majority. And if you're not, recognize that there are a lot of people, more than half of families, that are doing so. And that might help you think about, where might I focus to try to get that credit card bill where it is at a point that I can pay it off in full every month.
That's interesting and encouraging, because Stuart, like you, I would have been thinking the 70-80% number a little bit higher. So that is encouraging to hear. When you think about retirement, how does one visualize what that looks like?
Yeah, let's talk about the non-financial side of retirement. It's not just about making sure you have enough money. It's also making sure you're thinking about what you're going to do in retirement. So we at Rowe Price did a lot of research, and we came up with the 5 W's of visualizing retirement. They are who, what, where, when, and why. And let me briefly describe each one so you can start building your own vision. The who are the people you're going to spend time with in retirement. The what are the activities you will engage in retirement. And let me make an observation that the answer for most people to those first 2 W's, who and what, are work and family before they retire. And then people realize their relationship with both of those groups is going to change pretty substantially when they make that transition. So they need to think ahead of time about who they will spend their time with, what they will be doing. The second one is where, or sorry, the third one, the third W is where. Where will you live in retirement? Will you stay in the same house as most people do? The second biggest group of retirees will move one time. That's your classic, I'm moving to a retirement community. And then other people will move a number of times. So think about where you want to live in retirement. The fourth W is when. When will you retire? When we ask people that, we usually get one of 2 numbers, a dollar amount or an age. When I have this much money, or when I hit this age, then I'm done. But there are a lot of other things that go into that. How much are you enjoying your work? Have you figured out what you will do in retirement? Are you coordinating your retirement with somebody else's retirement? And can you get the when to synchronize? And the last W, potentially the most important one, is why. Why will you get out of bed in the morning? What will give you meaning and purpose? Again, for a lot of people before retirement, it's work and family. After retirement, where will that meaning come from? And we did some focus groups for this. We had one gentleman say that he had failed retirement. I didn't even know you could fail retirement, but he had failed retirement because all the money was taken care of, but he hadn't thought about what are those non-financials? What are those 5 W's that I have to have answers for in order to be happy in retirement and not be failing it?
What are the 3 decisions to make when it comes to achieving a financial goal?
Yeah, let's shift back to that financial stuff, because that does have to be in place. When you're achieving any financial goal, whether it's retirement or saving for a kid's college education, a vacation, whatever it is you're saving up for, there are 3 decisions you have to make. And in order of importance, they are how much to save, what account to use, and how to invest your money. You can't invest your way out of a bad saving strategy. So focus first on how much you're saving for your goal. You've heard it from those of us in the financial industry. If you're saving for retirement, make it 15% between what you put in and your employer puts in. When you're saving for college, think about how much you're contributing. That saving part is the most effective one. The second decision is what account to use. And that's because, as we all know, certain accounts give you tax benefits. So if I'm saving for retirement, I'm using a 401k or an IRA. If I'm saving for college, I'm using a 529. So look for ways to get tax benefits from the account. So if you pay less in taxes, all other things being equal, you have more money to spend on the thing you want to spend it on. And the last decision is how to invest. What is it going to look like for the time horizon I have, my personal circumstance, my risk tolerance? What does my portfolio need to look like? So start with how much you're saving, then pick out the account, then decide how to invest.
And finally, Stuart, now that you have identified the financial goal, how do you put investments to work?
Yeah, that how to invest part, that's got 3 elements as well. There's a theme here. The first one is your asset allocation, your mix of stocks and bonds, and that's driven primarily by your time horizon. We all know the more time you have, the more stocks, which have historically provided the highest return on average, the more time they have to get closer to that average return. And as your time horizon shrinks, then you would shift from stocks to bonds. So the first decision you make is, what asset allocation makes sense for me? The second decision is, how do I diversify? How do I make sure I'm owning different kinds of stocks and different kinds of bonds so that I don't have too much money in a particular investment or a particular part of the market that happens to do poorly, and now I'm in less position to achieve my financial goal? Then the third one is, how am I going to implement this strategy? I've got to rebalance every quarter. I probably have to change my asset allocation over time. Am I going to do all that myself? Am I going to get a professional to help me? Am I going to use an investment that does that for me? So once I've figured out my asset allocation, my diversification, and my implementation, the last point everybody needs to remember is to stick with your plan. The last thing you want to be doing is investing like a bunch of little kids playing soccer. When they go out on the field, they have every intention of playing their position and being on the field where they're supposed to be. And then what happens? The ball moves, the yelling starts, and people start running around after the ball. You don't want to invest that way. You want to put a plan together and stick to that plan, and that will help you achieve your financial goals.
All right, Stuart, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.